think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Today we are joined again with Justin Huhn of the Uranium Insider. What's been going on?
Oh, a lot, Daryl. It's the news has been like firing through a fire hose. It's just on day over day over day, it seems like of very, very positive developments for the sector following a pretty brutal summer for the sector. It was very difficult, very volatile, a lot of momentum selling that was unexpected, but this sector is not for the faint of heart, and you can't really expect outsized gains without outsized volatility. So made it through the summer. Personally added pretty aggressively to my long positions in the uranium sector in early August and then again in early September during those two washouts. And so far, so good. Sector's up 25 to 35% from 30 days ago. So very happy to see that. And just the good news, just day over day. It's phenomenal. I'm pinching myself. It's really incredible what we're seeing.
Yeah, for sure. Yeah, I mean, we had our last interview. We had some commenters that were saying like, "Oh, he's wrong about the price and the stock's going up," and I'm like, "Yeah, like my account looking nice." You know, so I think when we get to like time frames and when things carry out, I mean, some people, there's been times where I've sold stocks I think it was a month before or a week before they start to run. So you really have to exercise a lot of patience. I recently had that experience with some of the Chinese equities, you know, where I was positioned and then I just like, this is not doing anything. I'm just going to get rid of these, right? Luckily, I got back in before it ran again, before it
Oh,
ran out,
nice.
you know. But I was looking back at my prior holdings and I said, oh, yeah, like if I would have waited, 3 months, I would have been sitting a lot nicer. And so yeah, time frames matter, and when you're in these sectors. So I want to transition to nuclear and uranium. There's been a lot going on. We had the news of Constellation and Microsoft that spiked Constellation up significantly, and all the other uranium equities started spiking up. I think as a result of that. And so this whole narrative, well, I think it's more than a narrative. I think it's actually proven that these companies need clean energy, they need sufficient baseload power, and they have to pretty much run these data centers. And so, what are you seeing on that front? And you were just in London at the World Nuclear, what's called Nuclear
World Nuclear Symposium. Yep.
Symposium. So what are you learning on the ground, and what are you seeing in the nuclear uranium space? Hello, everyone. Excuse the brief interruption in the interview, but I want to tell you about my new newsletter called Money Levels Insights. By subscribing to this free newsletter, you will gain access to premier content, technical trades that I am making, and insights to the macro landscape. Also, I interview a lot of industry experts that provide me information off camera, and I would love to provide you all with some of that information that is given to me. So be sure to click the link in the description so that you can get on the list for this free newsletter that is going to be coming soon. Thank you all for your support. Now, without further ado, let's get back to the interview.
Sure. Well, the data center and especially the AI, hyperscaler, these very, very large data centers, potentially north of a gigawatt. In fact, there was rumors discussed in the past couple of weeks that some of these AI hyperscaler data centers are looking at potentially up to 5 gigawatts for a single data center. That's 5 large nuclear reactors just to power a single data center. That's how quickly this industry is growing. And Going back, let's say 9 to 12 months, we were already starting to cover this trend. We were covering the growth of electricity demand. We were covering the fact that AI is moving very quickly and data centers are growing, especially in the United States and to a certain extent as well, China, Japan, the UK, all highly nuclear dependent countries. But you could argue that it was theoretical that the tech companies would be seeking out nuclear energy because natural gas can be built faster. It's almost free in certain areas of the United States right now. It's kind of like a byproduct of oil production. There's so much natural gas coming out of the ground in the US currently. Um, Also, it's cheaper to deploy solar, even with battery backups. I suppose if you look at cost per megawatt hour of electricity production to implement that versus building a large reactor, right? It's much more expensive to build a large reactor. That asset, however, is baseload. It's always on. It doesn't depend on whether or not there's cloud cover. Doesn't depend on backup storage to buffer those, not only the nighttime, but multiple cloudy days in a row. And basically, what happened since then is that multiple deals have been done proving that nuclear is what the tech companies want. All other things being equal, they want clean and they want baseload. So that nuclear fits that bill. In certain areas, perhaps geothermal and or hydroelectricity can also fit that bill. But pretty much every river in this country has already been dammed, 6 ways from Sunday. And only certain areas have geothermal that is sufficient to actually create consistent energy. So geothermal is something that the tech companies are looking at also. But as of now, what are we seeing? Back in March, uh, Amazon Web Services bought the Talon Energy's data center that's powered by the Susquehanna nuclear power plant in Pennsylvania. Like you mentioned, Constellation signed a 20-year power purchase agreement with Microsoft at north of $100 a megawatt hour, rumored, not officially, but that's what it's rumored, and I'm hearing it's even higher than that. Excuse me. So, and this is to bring Unit 1 of 3 Mile Island back online. So, a reactor that was shut down in 2019, and it was shut down because there was not a sufficient electricity market to justify life extending that reactor. 5 short years later, they're bringing it back. So that's a huge, huge news item. Not only does that show you that there's going to be near-term demand for Constellation for the initial core load and then sufficient uranium and fuel services across the fuel cycle to power that reactor bringing it back online. So it adds incrementally to a demand picture. But it's, again, another piece of evidence that the tech companies are seeking out nuclear and they're paying up for it. 2 days after that news, we had a Climate Week event in New York City where we had 14 of the largest banks internationally with $14 trillion of assets under management pledge support for nuclear, basically saying we are going to be willing to engage in these projects, engage financially, potentially as lenders, to support the COP28 goal of tripling nuclear by 2050. And that, in our estimation, is even a much, much bigger story than the Microsoft and Constellation story. Even though it's a really, really big deal to bring 3 Mile Island back online, because 3 Mile Island, if you ask anybody over the age of 50, what sort of connotation they attach to the name 3 Mile Island, they'll be, oh, scary, scary stuff, meltdown in the 70s. So that's a big sentiment indicator, I suppose. But for the big banks to be willing to engage in building out new nuclear, we're going to hear announcements of large reactors being built in the United States. That's coming back to the US. Uh, the news is just coming through a fire hose. But these are the really big stories, and data centers, especially AI data centers, are growing so fast, and I think it's ultra clear that it's highly unlikely we're going to see reactors shut down in the United States going forward for the next decade and beyond, until and unless we get to that 80-year to 100-year lifespan for these reactors. It's de-risking the existing fleet first and foremost. We're restarting 3 Mile Island, restarting Palisades in Michigan. That's happening next year. They just secured that loan from the DOE. But we've also heard in this past week, there's been more than 60 billion in loan requests to the DOE for the clean energy production, clean energy investment tax credits. But this is just the loan office from the DOE, 60 plus billion in requests. So that should be a tell as to what's going on here. So a lot of these loans are probably going into uprates. That's improving the mechanical aspects of certain aspects of the nuclear reactors that are existing operating to produce more energy. So uprates also means more uranium demand. But some of this loan request, I believe we're going to hear, is going to be for new large reactors being built in the United States.
Mm-hmm. Okay, so we have. I mean, that's very bullish and really helps solidify my view on the sector. Going forward, even more. So the price of uranium itself, it's been kind of. I mean, it came up to over $100. It's been down to like 79, $80. Now it's at around 80. I'm just looking at it now. 81, close to 82, and so these reactors are going to need this commodity. And so, what's your view going forward on the price of uranium? Because right now the equities have moved up, and I was kind of at first like, okay, where the equities mispriced compared to the commodity itself, which that seems to be the case because I mean, you mentioned buying in early August. We had the Japanese yen carry trade, and then we had another washout. I added in both of those times as well, and the price of uranium stayed pretty solid. It was pretty steady. It didn't drop with the equities, and so just want to get your view there and your take on that thesis, and what do you think is happening there?
Sure. The price of uranium is going way higher, period, the end. The most important point that anyone needs to understand is that in a commodity market, when demand pulls back and the price is stable and or rising, so in the case of the spot market, the price has been stable, low 80s, dipped into the high 70s a couple of times. That's immediately arbitraged by traders who can sell into the midterm market and make a decent little profit. That's called a carry trade. That's been picking up steam over the last couple of months, chopping some wood in the spot market, some material that's available there. But the term price is $81 a pound here. It started off the year at 68. So the term price is up about 20% year to date. And that's during a year where we've seen 54 million pounds signed in the long-term contracting market. Keep in mind, the demand, the actual burn up of uranium this year is going to be roughly 180 million pounds, with contracting at not even a quarter of that, right? Or not even a third of that. 54 million pounds year to date, right? So it's been a very quiet term contracting year. That's picking up right now, by the way, significantly. We're starting to hear about multiple RFPs hitting the market, a lot of off-market and on-market discussions going on in the term market. We're going to see a lot more pounds officially signed in the term market between now and the end of the year. But from January till last month, 45 million pounds secured in the long-term market, and the price kept marching higher. Okay, that's not an oversupplied market. When demand pulls back and the price keeps rising, that should be pure evidence to you and to everyone that the market is undersupplied. And when demand does come back in significantly higher volumes, it's going to push the price even higher. And that's what we're seeing right now. So last week was the highest volume traded in the spot market in over 2 years. That's how much volume was done last week. It was significant. 3 million pounds were traded in the spot market in a single week last week. So that's a lot. And much of that was this carry trade. So that's traders that'll come in, they'll buy at 80, 81, then they'll go and they'll sell to utility 12, 18, 24 months down the road, sell it at 88, 90, whatever it is. And they do that time arbitrage, and they'll do it if the term market is higher, sufficiently higher than the spot market, and they can calculate in, factor in the cost of carry, basically the cost of capital, and to hold that material for a year or two, right? They make a couple of bucks a pound of profit. So that's what's happening right now. A lot of trader volume last week, but they weren't the only ones in there. Producers were buying, utilities were buying, even some financials were buying, and not just spot. So the activity is increasing significantly during the months of September. We think that trend is going to continue October, November. December is usually quiet because of the holidays. Maybe the first week we'll have some action. But for the next 2 months, we're expecting significantly more volume being traded in the spot market, being secured in the term market, and the price is going to go much, much higher. As far as why the utilities have stepped back, largely until recently, it's mostly has to do with uncertainty, largely around the bifurcation of the market, Russian uranium ban, right? That was the uncertainty, the big uncertainty. It still is right now because there's concerns that Russia is actually going to say, you can't fire me, I quit, and not send that material to unfriendly countries. This has been speculated on for the past 2 years by the uranium price reporters and the analysts like UXC and Trade Tech. They've been saying, okay, there's this legislation that's been proposed and is actually going through the House, and then it eventually passed the House, and then it passed the right. They took the legislation over a year, but during that period of time, UXC keeps saying to their utility customers, there's a greater than 0% chance that Putin decides to just stop sending that material. And that is what is happening right now, potentially. Putin said, we need to look into these critical materials that we're sending to our foes. So the US is actually funding and arming Ukraine to actually send artillery into Russian territory, and Russia is still supplying us. So Putin's like, what the hell are we doing here? Let's look into this. And so immediately his henchmen are looking into it. And so they're assessing the global market, which, by the way, there's plenty of customers for their exports if they cut off the US and the UK and Canada and France and whoever else they deem to be unfriendly. They can sell to China. I'm just speaking uranium, but this is probably across these critical minerals. China, India, Hungary, Belarus, Egypt, the UAE, like all of these countries can buy uranium material from Russia. So they've got a sufficient market outside of their foes to sell this material into. And there's real concern that this is going to come to pass. And while the US utilities have done a lot to pull forward Russian material, they've done a lot to contract outside Russia for enrichment and conversion. And you've seen that evidence of that in the market, right? Conversion and enrichment are up 2x and 3x in the last 2 years. Crazy, record high prices. But there are other players that are still very, very exposed to Russia, current and future deliveries, especially France. So if Russia decides to not send exports to their unfriendly countries, and France is on that list, we've got a real situation. It's going to be a major disruption in the fuel cycle, in the nuclear fuels market. Okay, so that's the uncertainty piece. The other piece is just the price. When the price goes to 55 to 106 in 6 months, that scares the hell out of utility fuel buyers. And they do what they can to buy time. So they'll nibble a little bit in the spot market, they'll nibble a little bit on carry trades. They're going to pull forward some material from wherever they can. They're going to flex up on their legacy contract deliveries. And all of that combined buys them a little bit of time buffer to sit out and see where their market settles out. So the spot market settled out from 106 down to 80-ish. It's 82 here. The term market just kept rising. So their stepping out of the market didn't really solve their problem. We didn't see the price crash back down into the 50s or even the 60s or even the 70s. Would it hit 79 or 78.50 for a day? Whatever. $80 a pound is the higher low from 55 over a 12-month period. That's an enormous, enormous increase in price. It's a very difficult market right now for nuclear fuel buyers. Anyone who's uncovered between now and 2028 is really having a hard time getting what they need across the fuel cycle. Very tight. All it's going to take is volume coming back in size into the uranium market. That is going to happen. There aren't very many levers left for them to pull. When that happens, we're going to see the price respond significantly to the upside. That's just now starting. We've gone from 80 up to 82. Volume's increasing. It's going to keep going to end the year.
Mm-hmm. Yeah. Yeah. It was kind of interesting with because I was looking at I had bought into Centrus about a couple of weeks ago. It was at $35, and I know they supply low enriched uranium, and their share price just spiked significantly. Like it was like 71% in the last month, and so I mean it was $30 and it's sitting at $65 now, and so it was kind of I was kind of like, okay, what I've been trying to figure out more about the company and such, so I bought it as like a speculation. I wish I would have put more money into it, but I mean that relates to how Russia is supplying enriched uranium, and now they're talking about they're looking into potentially not selling it to non-friendly buyers. So yeah, that's kind of interesting, just seeing that news come out and then Centrus like pop like that. Um, I was wondering about the so you went to the symposium, and what was the sentiment like there? So I mean, you were in London. You got all this news coming out about nuclear. What was your perspective on that symposium?
Let's just say it was the polar opposite of the sentiment on Twitter. Like directly 180 degrees opposite. It was very, very positive, very constructive. There obviously was some palpable frustration amongst, let's say, the investing representatives. So there, the fund managers that go to all these conferences, they were all there, of course. Everybody was there. The conference sold out. So it was an absolute flurry of personal meetings, more so than even the panels and the presentations, which I did catch a few of those, but it's really the personal meetings because it's everybody from around the world comes to this one place. And so it's highly, highly valuable to be able to have conversations with people in person like this and one after the other for 3 days straight. So there was some frustration based on how the equities were acting, but there was also great information on why the equities were doing what they were doing. So that was part of the reason in going to these conferences is finding out what the hell's happening and shoring up our connections and our network, which is extremely valuable to us and to our membership. So what happened July, August? Couple of large funds that had small allocations to the sector in these factor baskets that were, second order, third order plays on AI, which everybody was really pumped about. Nvidia is flying in Q1 of this year. So these big funds go, all right, well, I've already got a position in that. What's the second order play on AI and tech? They figure out that's nuclear and uranium. They give a call to some of the other funds, like, all right, how do we play this? They bring up their Bloomberg, they find out what's liquid and they buy it. And they do it on momentum so that all of this is moving up. So you had the moves in the first part of the year and then into April, May. These funds were chasing this as part of these factor baskets that were allocated to second order plays on AI. Then as soon as Nvidia starts dropping and the AI play is temporarily over, they just dump this stuff without having any understanding of the fundamental underpinnings of this market. So if you have a couple of large funds with small allocations and they drip out shares, that can affect a sector as small as this. Then it hits retail stop losses. People get margin called, and it just creates this snowball. Then you have sentiment, you have capitulation. And so the first part of that was the yen carry unwind, which was our sector was extremely quiet late July, early August. So when that hit, just everything got thrown out. That wasn't unique to uranium. Leading into the later part of August into early September, and you can actually look if you bring up a chart during the 3 days of the WNA conference, which is September 4th, 5th, and 6th, that was the bottom of the retest of the August lows. So the sector was bottoming as this conference was happening. And so it was crazy, Daryl, just to be in these conversations and be like, Dude, China added to their inventories 200 million pounds in the last 2 years. How are the utilities not in a panic mode right now? Um, AI is driving this in a big way. There were tech representatives, the big tech companies sent reps to this conference to kind of sniff around nuclear. Um, all of these things, life extensions are happening. There were already whispers about 3 Mile Island happening, life extensions, potentially new builds in the US, like all of this momentum, incredible momentum and beautiful underpinnings fundamentally that were discussed at the conference. Very, very high vibration kind of event. And in the background, which I was largely ignoring in that particular moment because I was focused on this conference, have 5 minutes, I'll go on Twitter and people are in panic and throwing in the towel. And I get it. That was a difficult period to go through. And we've been through many of these pullbacks in the last 7 years that I've been following this sector. This sentiment over the summer was as low as I've ever seen it, despite the fact that the pullback was less than some of the others that I've witnessed and held through. Excuse me. So we wrote about this in the newsletter that just came out this morning. There was a section that basically started out saying the market can be a cruel mistress, and it really can be. And what takes time and experience to be able to weather these sort of events is understanding that oftentimes, especially if you're a fundamental investor or a contrarian investor, is acting opposite your emotions. It's really damn hard to do because when everybody is panicking because the price on the screen becomes the narrative, your natural reaction is like, God, how low is this going to go? I need to preserve what I have long here. And that's a completely natural feeling. And by preserving, I mean selling. Yet, when you have SPUT at a 15% discount to NAV, RSI falling off the screen, and terrible sentiment, if you're a contrarian and you're fundamentally long the sector or want to be long this sector for the years to come, for this long cycle, bull cycle for uranium, that's when you should be buying, not selling. And that's what I personally did. That's what we had recommended to our membership during both of those periods of time. During August, I put out a video to our membership during the carry unwind that Friday and Monday. And Monday was the low. It said, I am buying. I am selling some low conviction stuff from other holdings because I have a balanced portfolio. I trimmed a bunch of stuff that's kind of like there for the balancing and not really high conviction and added with high conviction to uranium. September, I did a video for our membership also at the very last day of the conference. And it was the evening time in London, so the market was still open. I said, you guys, the market is wrong. And that's a very, very dangerous thing to say. But that's what I said. The market is wrong. This is about to pop off. I don't know when exactly the physical market's going to move. I think it's going to start to move during September, definitely during October. All the US utilities get new budgets. It's the new fiscal year, October 1, yesterday. So I said, the market has it wrong. The price on the screen is not reflecting what is being discussed at this conference. We're going to hear big news in the next few weeks. And I kind of knew about that. I didn't know what was going to be said, but I knew the Climate Week event was coming. There was going to be some news flow around that. So those were the two important messaging that I made to the membership. Of course, we message on a daily basis, but these washouts are very difficult to stomach. And to be able to know why it's happening and to understand that it's not being driven by the fundamental story or any problems in the physical market. And people on Twitter or X during this period of time, sorry to be long-winded, I'm almost done with this rant, are seeing the price on the screen and then they're coming out publicly and saying the price isn't moving because there's too much supply. The price isn't moving because the U.S. utilities are buying EUP from China and it's stemming the volumes being traded here. The price isn't moving because of XYZ, right? They're trying to come up for reasons to justify the action on the screen, and there's nothing you can do to justify it because it's completely divorced of the not only the structural nature of the market, but the physical market is not related whatsoever to what happened in the equities. This is a couple of big players with small positions just throwing it out just because. And that creates a snowball in a quiet physical market. So The quietness of the physical market during July, August certainly contributed to that. When you see positive things happening in the news for uranium, for nuclear, but the spot price is stagnating, if you don't know what's happening, that can look like a negative to you. So knowing what's happening, knowing why it's happening, and knowing with decently high confidence what's about to happen is crucial. It's crucial in this market. That said, of course, you can trade in and out if you want to. We don't do a lot of that. We don't like to pay the tax man more than we have to. So capital gains, we have to consider all of that. But this summer, early August, early September was an unbelievable opportunity to add to longs because the setup here is better than I've ever seen it. And I've been following this for, like I said, for 7, almost 8 years at this point.
Yeah, yeah. So this was some big news. I felt like this was big news. I didn't really see very very many people talk about this. So this was Nvidia CEO comes out and says nuclear power an option to feed data centers, and he said pretty much it's a good option for renewable energy needed for the growing number of data centers. And I know we've touched on this in this interview, but this came out on Bloomberg. I mean, it was just. I mean, I felt like this was big news. I mean, from the top AI chip company that many people have been following. Many people have covered Nvidia, and I haven't really heard anything, or seen a lot of people post about this. Was this on your radar? And do you think this has some big weighting to? I mean, just even solidifying like these big tech companies are not playing.
It's just another piece of that puzzle that is stacking up evidence of the tech companies seeking out dense, firm, baseload, clean energy, and that is nuclear. So what they're doing right now is they're buying up all of the available nuclear power, right? So whether that's the Talon Center deal that I mentioned earlier with Amazon, or it's Microsoft restarting. Now Palisade's going to restart the owner operator of the Dwayne Arnold plant, which was shuttered in the last decade, in the last 5 years, I believe. In Iowa is talking about restarting that. There's not a lot of other options for restarts in the US, unfortunately. So what that means now is new nuclear. The the biggest piece, I think, was a comment coming from the Nvidia CEO in an interview where he was asked, can we win the AI race? And I'm presuming we is talking about the US versus China. I'm guessing on this front, but that's what makes sense. Can we win the AI race without building new nuclear power? And the Nvidia CEO said it's impossible. I would argue that there's probably nobody else on the planet who has a better idea of the growth rate of AI than Nvidia CEO. He can actually see the orders coming in from the tech companies for the chips or for these data centers. So he knows the enormous amount of electricity that's going to be needed if we get anywhere close to approaching the projections for the growth of this sector. So for him to say that nuclear is on the table and also it's going to be impossible to even do this without nuclear, without building new nuclear, is a pretty profound statement, in my estimation.
Mm-hmm. Yeah, got it. And so, as we get ready to wrap up, I want to get your take on some of the nuclear technology stocks and companies that have been coming out. So I had I had a friend tell me about nano nuclear. They're focused on building micro reactors, but I mean, just even the whole process for them to get to that point. I mean, they're looking at like later this decade, unless like politicians start signing papers and where they can get past some of those regulations. And I've been seeing other nuclear technology companies. Obviously, we've had the SMRs and such, and so it seems like this is transitioning to. Okay, you got the big, huge reactors, and then now you got someone like nano nuclear who's like, hey, this can power your house. And so, what are you seeing on that front with the technology that continues to be worked on? Like, it may not even be in the mainstream news as much. But what's your take on that?
Generally speaking, electricity demand is growing, to speak generally. And I think that there's opportunities for all sizes of small modular reactors or large reactors. There's more than 80 different designs for SMRs from 70 plus different companies. So there's kind of like an arms race right now going on for which companies are going to be the go-to companies to build out SMRs. And I think that there's going to be two or three or four major winners, and that they're going to fit the required size for whatever the needs are for their end customer, right? So, for example, um, Ontario Power is building four BWRX 300s. This is GE Hitachi and GE Vernova design at the Darlington site in Ontario. They're breaking ground of that. That's going to be basically those four together is going to be roughly, a large reactor, 1.2 gigs. And then we're going to see what the costs end up coming in on for that series of reactors and see how it is comparable to a large reactor. In Canada, they have exclusively heavy water. So this is kind of new for Canada, actually, right? So they've got their whole fleet is large heavy water reactors. So for them to be building this boiling water SMR is kind of new. And it's awesome that they're doing that. Then you have something like the X Energy XE100, which is a high temperature gas reactor that they have a lot of interest from the chemical companies. Like Dow Chemical in South Texas wants to build a bunch of these. And why? Because they have extremely high temperatures. They have industrial heat that they can utilize in addition to the electricity. So there's different use cases for the different reactors. Then you have micro reactors that can be used for like remote military bases or much, much smaller communities that can't even handle a gigawatt or half a gigawatt. And then everywhere and everything in between. As far as the data centers go, all the talk lately has been in the big news headlines has been around these very, very large AI hyperscaler data centers. These are 1 gigawatt and larger, right? These are huge, absolutely huge. But there's a lot of other data centers that are also being built that are considerably smaller that aren't AI hyperscaler. They're just cloud storage, right? These data centers need maybe 100 megawatts, 200 megawatts, 500 megawatts. Those might be more appropriate to do a series of 50 megawatt or 100 megawatt SMRs instead of building or making a deal with a large gigawatt reactor. You also have to consider that especially in the case of like Microsoft and Constellation, Microsoft has a power purchase agreement. They're not going to take ownership of this reactor. These tech companies, they don't necessarily want reactors, a nuclear reactor on their balance sheet. They want the electricity. They've got the cash to buy the power at double or even triple the current rates, as is evidenced by this deal, but they don't necessarily want it on their balance sheet. So if they can scale these data centers incrementally, like let's say they've got a goal for 500 megawatts, they might start out at 50 or 100 and build a couple of SMRs. And those SMRs are going to cost a fraction of what it would cost to build a large gigawatt scale nuclear plant, right? So, the cost overruns at Vogtle 3 and 4. Let's say if we chop that in half, we're talking about if they had come in line on cost, off the top of my head, somewhere in like 6 or 7 billion for a single, 1,000 megawatt reactor, 1 gigawatt. Whereas you might be able to build a 50 megawatt SMR for 70 or 80 million. So if you can do that and then build one after the other, daisy chain these things and expand on that as you need the electricity with that expansion, that's going to make a lot more sense than funding or partially funding or incentivizing the funding of a gigawatt scale reactor that also not only will it be more expensive, not necessarily more expensive per megawatt hour of electricity production. The economies of scale probably will dictate that if we can build another dozen or two AP1000s in the United States, once we get these things rolling, probably going to be cheaper than building 20, 50 megawatt SMRs, right? Probably, but maybe not. We'll see. But the total cost of capital and the faster build times is going to look pretty attractive to any of these smaller data center tech needs, or just needs for, industrial companies, manufacturing companies. These sort of needs are also there. So it's across the board. It doesn't really, I don't really know who's going to win this race. The UK right now, Great British Nuclear, is having an SMR design competition where they're whittling it down. They started out, I think, with 6 companies, if I recall correctly. They dumped the first one. Don't remember what it was. They just kicked NuScale out. There's 4 more. I think it's Westinghouse, Rolls-Royce, GE Hitachi, and maybe the French, maybe EDF, if I recall. Either way, there's probably going to be a couple in that 300, 400 megawatt range that are going to be winners, that are going to be building, multiples of a kind. And then the micro reactors, hard to say who's there. There's certainly companies that are just emerging. There's companies that have been engaging with the NRC for more than 10 years that are much, much further along in that process. But pretty exciting. And, Trade Tech thinks there's going to be 200 million pounds of uranium demand from SMRs alone in the next 10 years. So it's a growth sector, that's for sure.
It seems like we are in a nuclear renaissance, and the story just keeps getting greater. So everyone, be sure to go over to uraniuminsider.com to check out some of Justin's work. He has an awesome newsletter, and you can become a subscriber. Also, be sure to follow him on X as well. And Justin, appreciate you coming on the show.
It's always a pleasure. Yeah, thanks so much for having me, Daryl.